A mutual fund is a financial vehicle that pools money from multiple investors to invest in various securities such as stocks, bonds, money market instruments, or a mix of these assets. Each investor owns shares, representing a portion of the fund's holdings. Professional money managers oversee the fund's investments, aiming to achieve specific objectives, like capital appreciation, income generation, or a combination of both. Investing in mutual funds offers several advantages, including diversification, spreading investment across various assets, professional management, and accessibility to a wide range of markets or securities that might be difficult for individual investors to access. There are different types of mutual funds, such as equity funds, investing in stocks, fixed income funds, investing in bonds, money market funds, investing in short-term, low-risk securities, and balanced funds, mixing stocks and bonds. Each type caters to different investment goals and risk appetites. Before investing in a mutual fund, it's crucial to consider factors like the fund's objective, risk level, fees, historical performance, and how it aligns with your financial goals and risk tolerance.